This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello guys, welcome back to Breaking Banks Europe. My name is Matteo Rizzi. I'm the executive producer of the show. Today the show is brought to you by Played proudly, and we're going to talk 360 degrees about payments and open banking with two, I want to say, monsters in a good way, meaning two extremely talented and knowledgeable people in the field, which I will ask to introduce themselves in a minute. Don't forget to follow us on social. Stay with us for this first 20 minutes, and off we go. Keith from Played, welcome to Breaking Banks Europe.
Thank you for having me, Matteo. It's great to be here.
Couple of words about yourself.
Yeah, absolutely. So I'm Keith Gross. I'm the head of international for Played. I lead the UK and European business. For those that aren't familiar with Played, we're the world's leading open banking platform covering North America, the UK, and Europe. And we support both open banking data and open banking payments use cases, powering a lot of the large consumer-facing and business-facing fintechs that people know today.
Great, Keith. Thank you. Let's go to the other guest, Eric Lassus. Eric, old friend from Societe Generale. Welcome back to Breaking Banks. Please give us a short introduction about yourself.
Thank you, Matteo. So great to be there. And I'm the co-founder and now the CEO of Treasure. And Treasure is a bank as a service platform that is installed and localized in Germany, France, Italy, and Spain now. So we are extending our services in Europe, and we are mainly an issuer. And now we are providing open banking services and instant payment, and also SEPA payment services. So very, very great to be there and to have a share all together.
So, guys, as you all know, nobody's perfect. I used to work for Swift for many years, actually 13. And I see a great comparison between the world of payments and Swift. People only notice it, Swift when things went south, right? When things didn't work for some reason, right? Because we were considered a commodity, a pipe, or like a part of the plumbing of financial services. In the same way, I consider payments, right? So payments is like a part of everyday life. You could consider it pretty much any startup of the planet as a fintech, because the last mile very often involves the payments, right? And I wonder whether we could start with some sort of general introduction about what kind of new avenues you see, in this space. Not forgetting the fact that the past at least 18 months have sort of changed the scenery a lot, right? So, Keith, why don't you give it a start?
Yeah, I think I absolutely echo what you're saying in terms of people only notice payments when they break, and that's where the world is headed. And if you think about that, I think my favorite example here is how people may not think about this, but how Uber changed payments, right? The idea of you don't have to think about paying, you just get out of the car when you're done with your ride and walk and the payment happens. I think that's where we're moving towards more broadly. And one thing that I think COVID really accelerated, which you also touched on, is the rise of the app-based ecosystem for managing your financial life. And I think in that ecosystem where more and more people are managing their financial health, making payments, doing everything from apps on a smartphone device, that is where account-to-account payments, I think, are really going to thrive going forward. And we're in the early innings of open banking payments paving the way there. In a world where every consumer and every small business can manage their banking application from their phone and receive funds on a banking application on their phone, and instant payment rails exist, we're going to quickly move to this world where instead of 4 or 5 intermediaries, you're just passing funds directly between accounts on those instant payment rails via APIs. And I think open banking providers are going to be part of the big story of that growth in Europe in the coming years.
Eric, go.
Yes, and so embedded finance or embedded payments means that you have to cope with a very strong and user experience as the payment is completely embedded in other services. So the challenge is to continue to be innovative or make it completely hidden, maybe, and also so to cope with the matter of user experience. So the technology evolves, but you should not compromise the user experience. So that's I think a challenge for us to be able to provide the good technology to make it happen and make it works.
So Eric, you mentioned like embedded finance, and I was actually thinking that Keith, make the numbers right, but I think I read that half, if not more, of the Fortune 500 companies in the US are using Plaid for finance. It might be like a bit less or more, but in like an impressive number of Fortune 500 companies are using Plaid for embedded financial services, right? And I always give this example of Booking.com, because because my friend Dan Marovitz sort of built a worldwide financial services platform for a travel company, right? That all of a sudden become very much a fintech company as well, because thanks to that platform, they could improve their bottom line for credit and collection, right? So why don't we talk a little bit and let's maybe your vision, your experience, your direct market experience with embedded finance, so that for like our auditors who are not all like a fintech super experts, they can sort of place the theme, and also your own experience with it, Keith.
Yeah, absolutely. So I think embedded finance is what we're seeing as one of the big waves and trends right now, just broadly on a global basis, but especially within the developed world. And I think what you can think of there is, again, going back to the fact that more and more the smartphone is the center of both an individual's and a business's life and how they manage their finances. In that world, then, what embedded finance is bringing is anywhere you have an application or service that already has a big user base, it's now incredibly easy for you to embed financial services using other providers into that application. And so we're going to start seeing that happen more and more. Easy examples of this are the ability to get loans or manage a checking account if you're a gig economy worker from the application where you're actually getting orders and serving them and navigating. And I think similarly, you're going to start to see any application that has a big user base start to offer financial services. And the reason they can do that is because all these services have been turned into exposed APIs that are easy to embed. And so what that means is you can go to a provider like a Plaid or Trezo or someone else, and you can bring in and drop in it very quickly with just a couple of weeks engineering effort, those services, and have them up and running. So it's almost a modular way for you to bring financial services into any existing application. And so the way I think about it is every tech company is becoming a fintech company. And I think we're really starting to see that come to fruition here with, as you mentioned, all the Fortune 100 companies that are starting to look at this more seriously.
Eric, would you like to comment?
Yes, and I am totally agree. And I would say, moreover, the idea is to not compromise the user experience, as I said. So that means that all what you want to, embedded finance means that you need to cope completely and to be completely embedded in the user experience and the user interface from the application. If you have, if you break the user experience, that means that you have not really well understand the matter. So the idea for the payment service provider is to allow services company to integrate the solution by means of API, as Kate have said, but to provide a good technology to let the user using the interface of the application, and not to break down this I would say user journey, the client journey. And this is simple to say, but not that simple to do, as you have to cope with data, because embedded finance mean understanding thanks to the data or the BI or whatsoever. So using data to propose services, copying with regulation indeed, but and with the user experience. So propose some finance, so such as credit or a payment facility or so on and so forth, and doing everything with the user, the client journey provided by the application. It's key.
And I think to add on to that, I fully agree and chime in on the user experience part, because I think where we're headed, and we're not 100% there yet in every industry and in every country, is to a world where you can use biometrics on your phone as your primary mode of authentication. So I think if you think about the era that we're in now of digital finance, typing in your card details or even using a plastic card to pay online seems unnecessary when you can get to this experience where I can just Face ID to confirm a payment. Apple Pay and Google Pay started that trend a little bit, but I think it's going to become more democratized as we get access to this. And PSD2 has really helped to urge this along here in Europe as well. And I think that's where we're headed in the long term, is the ability to easily control both access to your data, but also payments with no typing of any details, passwords, credit card numbers at all. It's going to take time to get there, but I think that's where payments is headed in this world.
I have to salute, Keith's kindness, because it is funny. I just realized that in all these years, I was actually technically pronouncing the name of one of the most famous company of the planet wrong. But I'm Italian, so I think that I have some you can cut some slack about it. But as of now, and I'm learning like live on Breaking Banks is flat and not played. And that's because, frankly, I've never studied English. I often confess that, and sometimes the easiest pronunciation, gives me challenges. So thank you, and I want to leave it live because people will actually, probably look at it with a smile. I hope you can forgive me, Keith.
No, thank you for noticing, and I definitely will not hold it against you. It's an American pronunciation, and it's a global world, so that's the way it is.
Cool. Actually, you mentioned so far we have been in a very sort of a European, US-centric context. Okay, as you know, I'm an investor in emerging markets, mainly in Africa, and what I'm noticing more often than not is that because the markets are often too small for a single startup to thrive in a single country, for example, a lot of startups are trying to build super apps, typically starting with the ride hailing, with an Uber-like, and then putting services on the top, such as, leasing of the vehicle, digital payments, merchant payments, and then peer-to-peer, and then insurance. So basically, this concept of composable financial services, even in emerging markets, it's been developing quite fast. And my question to you is, do you see particularly huge opportunity of growth in emerging markets, maybe because regulation gives that opportunity, or simply because, for a sort of the nature of the market, right, where aggregating different services is the only way to go? Eric, what do you think? Société Générale, is particularly present in Africa. You must be exposed, into some of it.
Yes, we are also in some country in Europe that are not so developed in payments. But let's say, yes, you're right. You're right saying regulation. It's a part of the matter. Sometimes because we have no regulation, it is difficult to start some new services, as it is not. We are not allowed to do so. So as soon as the regulator starts to deregulate or regulate some market, all of a sudden, so there are places for improvement, so we can set some services, and this is what currently is doing. It's currently done in Africa. So some countries are regulated the payments, some not, but we are on the way to. They are on the way to accelerate. So there are huge opportunity because of that. The momentum is good, in fact. So now you can imagine starting something in different country, because we are talking about cents or volume business or cents business. So we need volume to cope with our growth. So if there is no regulation, this is an issue. The second one is because of that there is no I would say facility, or this is not that easy to send payments abroad, as all the systems are not connected. In Europe, we are connected by means of SEPA, for example. In Africa, this is not the case. Each country has its own solution. So we need to cope with each country. So it brings some complexity in the platform. It costs a lot to provide the connection between countries. So thanks to the wallet technology and the peer-to-peer technology, as and open banking maybe, but open banking is not yet, I would say, cheap in Europe, let's say. I have to say that this is not really working well yet. It is improving, but in Africa, it doesn't exist. But the momentum is good, as the countries are now, because thanks to the regulation, the countries or banks are now working hard on the subject. The countries are building their interconnectivity between themselves, and so I think all these materials lead us to think that this is the good momentum to start some initiative in Africa, and we are currently examining this very seriously.
Especially because, by the way, we still have 200 million people in Africa speaking the same language and using the same currency. The franc CFA.
Yes, and as we said just before, many things came from the mobile apps, and in Africa there is just only mobile apps. So the population is very young compared to Europe. So that means that it will be, I would say, more difficult to set some services, but granted, the people, the personal individuals will certainly are more at ease to use it or to use some services easily.
I would definitely agree with that. And I think part of what makes emerging markets so exciting here is exactly that, because there hasn't been a lot of legacy infrastructure in some of these cases. You're moving directly from a cash-based economy to a digital economy, and you're going to see innovation because of that. And I think you're going to see net new use cases and net new things brought to market by the demand there. And I think I agree that regulation is going to be really important as well. But I'd also say that in cases where regulation comes slowly, the market can build a solution. We saw this in the US as well, where there's not to date open banking regulation, but there is open banking there. And so I think ideally regulators come and help promote this in a safe and secure way. But if not, I think it's totally capable for the market to build it themselves as well.
Okay, so last question before we break. Let's talk. I'm often asked, what are the biggest innovation in payments, and then often say, I'm not an expert on this because on one hand, it is really about infrastructure, and on the other hand, is really about. It seems to me that the main innovation are in the consumer behavior, in the behavior in which clients are going to pay. But there is one distinction that I would like to make, and actually to pick your brain about, which is it more a B2B or a B2C play in terms of innovation in payments? Because on one side, I see as an investor that there is a lot happening in, for example, marketplace, managing the supplier and demand sort of seamlessly, or like giving credits to your own supplier sort of play, which is still payments, pretty much B2B. And then what you just said about just getting out of an Uber, like touch your ring, touch your head, whatever, adjust your belt and make a payment. So more into. But and is it are they're certainly both sort of exciting, but where do you see most of the opportunities, Keith?
I'd say I'd offer two things. One is I don't think that one of those markets, B2B or B2C, is going to be better or worse than the other. I think there's a huge opportunity in both. I think in B2B, you're going to see less of these sort of net 45, net 60, like cash flow issues, and instead moving towards instant payments. So anything that was check-based, invoice-based is going to move towards instant payments over time. I think that alone is going to unlock tremendous value. On the consumer side, I think what you're going to start to see is movement towards things like self-driving finance. The idea where you can set groups of rules as a user to say, well, my paycheck comes in, send this amount here, put this amount in investment, pay off these bills, and it all starts to happen automatically. Things like variable recurring payments in open banking here in the UK are going to make that a reality. And so I think those are two things that I think are really exciting. We're going to see the death of checks in most business cases. And I think you're going to start to see variable recurring payments and innovations like that start to make self-driving finance a reality for consumers as well.
Sorry. Keith, let me double click in one of the things that you said, because it almost seemed to me like you were talking about the next generation of a PFM, right? Of personal finance management. Am I sort of seeing this correctly?
Potentially, but they could also be just the underlying payment services rails across a variety of providers. So it's not just a single PFM, but you as a user could be able to set rules using open banking services across a range of providers. And I think that's going to come over time as well.
Eric.
So to me, B2C, B2B, to me, the both I would say market have to grow simultaneously.
Let me help you.
Sorry. The point is, for example, in France, people are more at ease to use a card to pay. In Germany, they are more at ease to use a transfer, thanks to SOFOR that is started 20 years ago. So depending of the countries, depending of the client experience, depending of how an individuals want to pay, it could be also embedded, as we said. It's a concern. It's a B2B concern, and this challenge has to be solved. And the more you are paying, or the more user experience you may have as B2C, you contribute to grow the B2C business. But this has been said, if in B2B you have no means to pay or no place you can use your apps, it's worthless. So every market have to grow all together, and all are working to facilitate the payments, to allow new services to be used, etc. So they facilitate the life of the people, basically, to say that more simply. So to me, it's a global concern. It's not. And we see at Reserve, for example, we start a lot, and we notice a huge growth on B2B business. I would say the 3 previous years, and now we are noticing a huge growth in the B2C business, meaning that perhaps as the company propose now services, now the people can use it and to apply for these services. So I don't know if there is the two markets are playing all together, and they are, I think, playing together for the same objective, providing new services and innovative services. So to me, it's the same matter.
I want you guys to hold that thought on payment adoption, because this is how we're going to start the second part of the show. For now, stay with us. We are going into a little break, and back with us in a couple of minutes. Thank you.
Today's podcast is brought to you by Plaid. Around the world, more people than ever before rely on digital finance for their everyday lives. Plaid provides the open finance platform to make it all possible. Over 5,000 companies worldwide use Plaid to unlock financial freedom for everyone. Plaid helps people connect to and pay from their financial accounts at over 11,000 financial institutions across the UK, Europe, and North America. To learn more about Plaid and how we can help you build convenient, fast, and secure digital financial and payment experiences, reach out to our team at plaid.com/breakingbanks.
Hey guys, welcome back to the second part of episode 83, brought to you by Plaid. So, the past 18 months, as we were saying at the beginning, were shifting and leapfrogging pretty much everything in financial services. And if you have been recently assisting to the show we did about fintech journeys around the world, where we talked about experiences from Brazil, Middle East, Africa, Asia, Israel, there were parts of the planet where the adoption, basically the transition from cash into digital payments from 0 to 60% happened in like 3 weeks, right? So it was massive because nobody wanted to touch the money anymore. So I wonder how this forced, and I want to say unfortunate sort of forced leapfrog influence the way you guys approach the solution, the way you talk with your clients, and what was the impact, for your own organization, Keith?
Yeah, I guess I'll start with the last question, work back. I think definitely COVID, the way I like to frame it to people is they accelerated trends that were already happening and have set a new watermark. So I think you saw 5 years of growth in the value and need of fintech happen in 5 months out of force. And it was really painful for some parties, but I think it also just accelerated trends that were already happening. And so I think for us, we saw a few things. One is we went through the same thing that every other company did of everyone having to work remotely all of a sudden. It takes a week of figuring out, can we actually get business done this way? And then realizing, oh yeah, actually we're in a world now in the 21st century where things can function pretty normally in that life. And then what we saw was massive adoption of fintech and massive need for fintech infrastructure. And that really spanned everything from business and government. So we help distribute PPP loans through our providers in the US, for example, and Cybil's loans here in the UK. One of the biggest challenges from an infrastructure perspective as a government is, okay, I'm going to do stimulus. How do I actually get that stimulus into the hands of businesses? And the infrastructure wasn't there in many cases, and that's where fintech stepped in. Similarly, on the consumer side, you saw whole generations that were used to doing their banking in person at the local bank branch moving on to fintech. For a period, the fastest growing segment for PayPal was people over 50 years old last year because of COVID. So I think you had this whole shift in people getting used to using fintech tools and financial services digitally. And I think the other part of that acceleration, as you mentioned, is there was a shift from cash to digital payments. I think we have to be very careful as a society that we bring people along because there's still whole segments that are dependent on cash. And I think that's one of the things where open banking has an exciting impact is now it's cheap enough to serve those people that actually you're starting to see underbanked and unbanked folks brought into the financial services system by fintechs versus traditional financial institutions. And so I think generally all of this just led to a massive acceleration in adoption of fintech. One of my favorite stats to bring up there as well is there was a more than 10 percentage point increase in the adoption of e-commerce in the UK, which is massive when you think about like 10% of commerce moved online in the last year in one go because of COVID. That's not going back. That's staying there and increasing. So I think really you saw this acceleration of trends that were already happening, but in a step function change.
Eric, before you step in and give us your point of view, I want to bring an example on Italy. It's my country. I don't live there, but of course I'm pretty familiar with what is happening in the ecosystem. And just before COVID, there was this law that sort of imposed the mobile point of sales for everyone, right? So the opportunity to pay with a credit card was being made mandatory by the government. And of course, you know that Italy is the king of the country of small and medium businesses. That sort of payments are a bit creative over there. And if possible, cash is better. So a country like Italy, which is not exactly a third world country, it sort of went from a place where it was already an achievement for a small and medium business to get a mobile point of sale, to be able to pay locally, into a place where that was already sort of history, right? And not a compelling story anymore. So Eric, maybe you can give another example, whilst you comment and answer to this first question. But it was that example in a country like Italy of that sort of leapfrog. I think it's pretty pretty stunning, in terms of even the behavior in the mindset of the people,
Yeah, I do agree that. But not only in Italy and Spain, also, and even in France, where payments, it's, I would say, common today. This context or brings, I'd say, new state of mind with the people, where, as Kit said, they are now more at ease to use the new technology and the fintech services, and also vendors, or I would say company, or small company, or even more big one, have really took the point that they have to improve the way they provide the payments, and not only proposing a point of sale with mobile apps or mobile payments, but doing more than that. And the online payments was a matter of living or dying last year. So yes, it is true that we have noticed at Treasure that a huge growth from the fintech. We were worried the first months. We noticed the first 3-4 months that the activity decreased, and for example, it's meaning that perhaps people were waiting for, or so the payment activity decreased a lot during the 2-3 first months, and all of a sudden, the people did realize that they have new ways to pay online and to use services, not with cash, not with point of sales, but online, using apps, etc., and using fintech services. And all of a sudden, the fintechs start to grow, and it lasts, I would say, the previous years. And this year, we noticed that now the fintech jump or reach another step where the growth is confirmed. I may say they confirm the growth, and now they have started another trend with more volume, more perspective, and etc. etc. So and this is something that is confirmed in all the countries where we are located, and this is very interesting. As we said, even older people now are more at ease to use services from fintech, because they are alone and they need to cope with their daily life. And I think there is as we said, there is a before COVID, and I think we will live after COVID. And this is, for our industry, it's a good news, really, and it will improve and make some innovative services growing faster than it was expected. To me,
Keith, I see you nodding a lot.
I just fully agree with that. I think COVID in some ways proved the value of fintech, and I think it will continue to be a valuable part of the ecosystem going forward. But this was the test moment, and I think fintech showed up for most of society as a really important piece of getting through a time where your financial life changed overnight as a business and individual. You're stuck at home and you have to do everything digitally, and I think fintech really came through in that moment.
And actually, keep talking about this. So payments is one aspect, right, of this innovation in this new customer behavior. But there is also a galaxy of fintech services that are functional to the payments, that had to innovate as fast as the payments did. And I'm thinking about identity services, security, authentication, all these sort of corollary services to the payment itself that had to adapt itself, right? Could you maybe share some of these trends that came together, with payments, and where have you seen the greatest innovation?
Yeah, I can chime in there. I think one big thing that people maybe don't think about as much is just as important as the payment was your financial data side. And I think I'll talk about that from both a business and a consumer perspective. So if you were a business, right, you're used to loaning against statements on your company or your credit score, which has always been lagging. When COVID hit, exactly as Eric described, for many businesses, there was a cliff drop temporarily. That wasn't reflected in lagging data, but it was reflected in real-time transaction data. So what we saw as a development here was actually a huge demand of and increasing use of open banking real-time transaction data to measure and understand the health of individuals and businesses in that moment. So not something that's 6 months old or based on how often you repaid something from 12 months ago. It's what's the cash flow going through your business accounts right now today. And that is going to become, I think, the norm going forward in terms of how you measure health of businesses and consumers. The other thing that changed is you were probably using a lot of different services. You had your pension somewhere, your main current account somewhere. You might have had an investment account somewhere or a savings account somewhere. All of a sudden, if your financial life as an individual changed overnight because of COVID, you had to find and track and really get an understanding of what's my financial health. So we saw a huge increase in demand for the ability to track and understand your health across all of those different services, which again is something where open banking plays a huge part. So I think as well as the payment side, the data side was really important in helping individuals get through this. And we ran surveys in the US and found that more than 60% of individuals wouldn't have been able to manage their financial life without some sort of fintech to track and understand their finances during COVID. I think that's really impactful. And I think that trend will continue going forward as people went through the step of understanding, I want to know where my money is, how it's being used, and now I'm going to use that on an ongoing basis.
Actually, it's. I want to pick on the last thing you say to ask a question to both of you, and you said that like 60% of the people you interviewed would not be able to sort of cope with financial services without a fintech, right? Which makes me ask you, what do you think is now the role and will be the role of the more traditional, part of the equation, so the incumbents, right? Because I see them smartly using more and more companies like you guys to efficiently deploy services that would take too long, too much. Too long. It would be too difficult and too expensive, to build it themselves. Great. At the same time, they have also to change mindset a little bit, and not only the not invented here syndrome, but as well as let's acknowledge the fact that if I use a third parties are going to be more efficient. How have you seen in the past? I don't know, say months, because I'm pretty sure that even for financial institutions there was a big shift, in the past year and a half. How do you see their role and, most importantly, mindset evolving, Keith?
Yeah, I guess I'll start out with one thing. I think this has been happening for a while, but it's now become, because of COVID, the primary thing. Your mobile app needs to be thought of as your primary way to acquire and keep customers. So if you're an institution, you need to have a top tier application experience and user experience, because that is so critical. I think the other thing that you need to think about as a financial institution, I think the forward-leaning ones are starting to do this, is, are you going to be the place that provides all financial services for your users? Or instead, are you going to start to expose those services that you provide today and plug them into other places where users might find them? In essence, can you become the provider themselves? And we're already starting to see that with some financial institutions starting to create their own API-based services or leverage partners to offer that and expose their services in other places. I do think you're going to start to see that happening. And I think the institutions that have gotten their head around, okay, if I own the current account for a user, what I'm going to start to become is the routing hub for that user's life, as opposed to the big store down the street where they go to for all of their financial services. I'm the place where they go to route all of their financial services into other providers. and there's value in that as well. I think you're starting to see institutions go through that mindset shift, and that's a really important one to think through as well.
Eric, you have an incumbent as part of your daily life, most of the time. So you're very well placed to answer this question.
Yes, we have noticed some change with some partners, even from banks, let's say. Time to market was always a discussion or matter to take into account. And with the COVID-19, the time to market were, I would say, stressed at this maximum. So before we say, okay, to not miss this wave, we need to set something in 6 months, or let's say 8 months. So we will be up and running next year. So the things happen is, if you were not able to start something in 2 months, as the tsunami will just last 1 year. So when you get ready, it's too late. So my point is, using platform and using fintech now is really identified as a matter of success, being on live and going live very quick. So because sometimes just saying that or studying the matter lasts 6-8 months for company, just to decide or to have an idea of, shall I go that way, shall I go in-house, or etc. So now it is more obvious that technology needed to be implemented is not that easy. The guys have done the job, so why not starting and not struggling months to decide, set the service, and let's say if I am successful, maybe I can ask some questions, deeper question later on. So to me, I noticed that I have less and less discussion on, shall I do it by my own, or shall I use your service? There is no discussion. So the idea is to just move ahead and make it happen. So that's interesting, because now, as the people or the individuals now are more at ease to use digital services, so time to market become more and more, I would say, an issue or strategic. And that means that everybody got the message. The society change or can change dramatically in a short period of time. So perhaps we have to cope with the COVID-19 today, but what will happen in 3-5 years? What would be the trigger of the next changes? We don't know, but what we know, it will happen. So to me, there's a message as was taken into account by company, and to me, for platforms such as Trezor or Kate ones, we have I'm sure that we spend less time to explain how to set something very fast and how it is complex to do so, even though the client journey is very simple. It is, as I said, it is like in music. So when you play something very simple, doesn't mean that you cannot play something very fast. So, it's just because you are very experiment or you have experiences. That's it. So this is my comments on the matter.
Keith, you wanna add something? I wasn't sure if you wanted to compliment.
No, I mean, I think I definitely agree with that, and that's a great point by Eric. But I think another key mindset shift you're seeing is this idea of, I should partner for everything that's not my core competency, because it will increase time to market drastically. And so I would definitely agree that you're seeing less of that internal debate and more of a recognition of, these are the things I as an institution do really well. These are the things I don't, and I'm going to partner for the things that I don't, because that's going to get me to market faster, and speed matters right now.
Actually, apologies if I go back to the emerging markets chapter, but you will see, Keith, that I'm going into your avenue, or at least into an avenue that you like. So talking about account-to-account payments, right? That you see as one of the trends, for the future. Can you imagine a world where accounts are actually completely interoperable? Like think mobile wallet and bank accounts completely interoperable, right? This is no news in Western economies, right? But in emerging economies, this is a battle still today. There are only very few countries, in Africa, for example, which is the continent that I know best after, the usual suspect ones, meaning Europe and US. There are few countries like Tanzania, for example, where thanks to an open banking infrastructure brought by the Melinda Gates Foundation, we're talking Mojaloop from our friends Costa and stuff, et cetera, both bank accounts and telco accounts, mobile wallets are interoperable. The effect was a huge jump into financial inclusion. So I have this like a light bulb, in my mind saying, wait a second, guys, the moment where, people actually, companies, players like you can push, wallet and bank accounts to become interoperable, financial inclusion will boost immensely. So that is maybe the greatest opportunity. And also sort of along with this account to account trends that you were mentioning, Keith, don't you think? I mean, sorry for the rant, but I was trying to make sense of an idea that they just had. What do you think?
I think we need to get you on stage. You're such a good spokesperson for the future of financial services. No, I couldn't agree more, though. And I think this is part of the value that infrastructure players can bring, because it will take an incredibly long time to rely on governments to create that interoperability themselves between the rails. And so a lot of the value, and like I think about this from our perspective at Plaid, a lot of the value that we bring to our largest customers is we can help them create the same experience and interoperability across New York City, Toronto, London, Barcelona. And I think over time, as open banking spreads to more and more jurisdictions, that is what's going to happen. And if you think about some of the things today, like why should it cost 5-6% of a transaction to do remittances across borders? You're going to start to see that get eroded over time because of this interoperability. But that takes time, it takes effort, but that is definitely, I feel like, inevitable, along with the rise of account-to-account payments alongside that. And I think that's where we're headed over time. And it's taken a lot of players working together to make that a success. But you're 100% right that that's where we're going. And I think ultimately in the future, the idea of being able to send money directly to another account, regardless of where they bank, that's the future of unlocking financial freedom. And I think we're headed in that direction.
Eric, would you agree with that? Please comment a bit on my rant as well.
Yes, I'm totally agree with that. I think there are, but to me there are still some room for improvement. I don't know for other countries or such as Tanzania or I don't know Brazil or let's say Asia, but in Europe, for example, we are coping with the point is because of the regulation we need to put in place. So before we imagine the open banking like this, so allowing transfer between payments, making a terrific client journey, making it very easy to and cheap, etc., instantly, something real time. So imagine everything. But regulator, and this is a question that often I am raising, say, innovation will come from regulators, or innovation should come from fintechs? I mean that we innovate and create some, I would say, innovative payments products or services, and all of a sudden the regulators say, okay, you need now to manage your credential, and you need now to do this, and now it doesn't work. Because even though I have an application to transfer from account to account, I need to identify myself, I need to put my credential like this, and all of a sudden say, okay, forget it. It's too complex. So to me, there are room for improvement. But this has been said, yes, I'm totally agree that thanks to this account-to-account facility, we have there are some request to pay services that come through. We have lots of I would say services that are proposed. So to me, it's really a good opportunity to evolve in the industry, and there are, I think, good potential on this room.
A couple of quick points. For sure, I mean, we are talking about, if Europe was the El Dorado of the open banking solution and instant payments, but it's not. There are plenty of opportunities in still in Europe, and of course, the emerging markets is a completely other scene where even the needs and the footprint, the technology footprint is different. I was thinking, I don't know if you're familiar, guys, but there is this platform called Lender Market in Europe, and it's like a peer-to-peer platform where anyone in Europe can basically lend his own money. It's a peer-to-peer lending that is coupling with a loan originator Credit Star or stuff like that, right? Well, the way to deposit money in this platform for anyone in Europe, it looks like still a bit prehistorical, right? So I have to make a wire. There is a difference. It takes 3 days. There is no reason why this thing, which is, by the way, such an innovative service per se, like a crowd lending peer-to-peer Europe-wide, there is no reason why the fund deposit should be that I don't want to say cumbersome, but if nothing else, slow, right? So one thing I wanted to say is that even in Europe, in the fintech space, there are still huge opportunities. And something else, but maybe this is, I know that we have to wrap up, Keith, but if I would be extremely interested in, you mentioned the democratization of payments. You say, why does it cost 6 to 8% to send the payment from a point A to point B that are not Paris and Berlin, right? Well, it would be interesting to figure out the moment you start interacting between continents, for example, or between currencies that are not the easy ones, where it is easy to hedge and stuff like that, whether or not what's the role of decentralized finance and what is the role of players like Plaid and Trezor to play with it. But I want to just leave this appetizer, for our auditors, because I think it's a super interesting discussion. Quick comment on this, Keith, maybe.
I think there's an incredible amount of opportunity, and I think there is still improvement in our own backyards. And so obviously, I think both Eric and myself and others are busy at work from that. And while I think this process is inevitable from a first principles perspective of smartphones for the foreseeable future are going to be how people manage their financial life, you're going to be doing that from an app-based ecosystem, and account-to-account payments make sense in an app-based ecosystem. That is inevitable, but getting there is going to require a lot of work and a lot of improvements and changes. And hopefully along the way, we'll see all sorts of interesting innovations coming from spaces like DeFi as well. But I think there's still a lot of work to do in just the core traditional financial infrastructure as well.
Keith, thank you very much, because I was secretly hoping you to wrapping up the show for me, and you just did much better than what I could have done it myself. So now the only thing I have to do is to thank you both for being part of this show, to thank Plaid, of course, to sponsor this show for us. I think the discussion, I enjoyed at least the discussion very much. Super quickly, how can people find you? Twitter, LinkedIn, and maybe your website, Keith?
Yeah, you can find me on Twitter at KMGross, KMGROSE, or plaid.com.
Great. Eric?
Trezor.com and LinkedIn, Eric Lesis.
Great. Guys, thank you very much for being part of the show. That was show 83. Stay tuned. Thank you.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.